video. Before we begin, a quick disclaimer. I am not a SEBI registered analyst. The content you are about to watch is purely for educational purpose. It's not financial advice or investment recommendations. Please do consult your financial advisor carefully before making any investment decision. Cryptocurrency has become one of the most discussed topics in finance over the last decade. From being dismissed as internet money to now being recognized by global institutions, it has transformed into a multi trillion dollar asset class. In today's video, we'll simplify what cryptocurrency is, why people should consider investing in it, its legal and tax statuses in India, the risk involved, and how you can get started safely if you are interested. At its core, cryptocurrency is digital money powered by blockchain technology. Unlike traditional money, it works without banks or any intermediaries. Instead, transactions are validated on a transparent and decentralized ledger. Think of it like this: instead of a bank keeping track of your balances, the blockchain is a global ledger where every participant can verify their own transactions. Popular use cases include Ethereum, Cardano, Solana, all of which power not just money transfers but also decentralized apps and smart contracts. Now, something that you should be worried that why should anyone consider crypto as an investment class? Why should we even bother investing in crypto? Let me help you answer that. There are three main reasons. Number one, it is a very good hedge against inflation. With rising inflation, some investors should consider seeing crypto, especially Bitcoin, as you can consider like a digital gold. Number two, it's a very good portfolio diversification. So it acts as a non traditional asset, reducing dependence on just stocks and bonds. I'm sure you guys remember my previous video where I spoke highly about portfolio diversification, wherein a well balanced portfolio should have stocks, mutual fund, gold, real estate. Among them, cryptocurrency is something that also it can be considered as a portfolio and asset diversification. Number three reason. Slowly but steadily, we are observing growing global adoption. Countries like El Salvador have accepted Bitcoin as legal tender, and there are a lot of companies like that of Tesla who have experimented with crypto payments. So, for example, if you're imagining your overall portfolio to be like the pie chart, if everything is in stocks and bonds, you are exposed to traditional assets. And with that, you are also exposed to traditional risks, which goes through a cycle of ups and downs. So, adding even a small slice of crypto can provide exposure to a completely new asset class. Now, let's address the big question: is crypto even legal in India? Let me break the ice on this. As on 2025, cryptocurrency is not illegal, but at the same time, it's not fully regulated as well. The RBI remains very cautious, but there is no outright ban on cryptocurrency yet. Meanwhile, the government of India is actively exploring its own CBDC, which is the central bank digital currency. I'm sure you guys have heard of it, which is nothing but the digital rupee, right? The online rupee. This signals that while private cryptocurrency may not be encouraged, the underlying blockchain technology is still being considered very seriously, even by regulators. So if you're trading or investing in crypto, be very clear on the tax rules. So as of today, while I am making this video, 30% flat tax is there on all crypto gains. Over and above that, if your transaction is exceeding 10,000 rupees, you will also be charged 1% TDS. There is no deductions allowed except for the cost of acquisition. So in short, the government treats crypto like lottery gambling winnings for tax purposes. So always factor this in your high tax rate before expecting any big profits out of it. Now, if you're still interested and if you're still there with me, the question that might come to you is, how can you invest? So here's how you can begin safely and responsibly. Number one, use trusted exchanges such as CoinDCX, WazirX, or CoinSwitch. You can start small, maybe with only 5% of your monthly investment that you are planning to. Only 5% of that, it can go into small SIP each month on building your cryptocurrency portfolio. You should also store your asset in wallets. There are two kinds. One is the hot wallet, one is the cold wallet. And in the next video, we can talk in detail about these wallets. If you want a video, especially on crypto wallets and how to store them, please do hit the like button and do comment on it. I promise I will come back to you in 1 month and make a video especially on wallets. Also, you could consider an SIP approach where you can invest small sums of money regularly. This helps in averaging out the volatility of it. Now, let's get real. Crypto is extremely risky. Some of the major risks are high volatility that we already spoke about. Prices can swing anywhere between 20% to a 30% even within days. For example, in the chart that you see, uh, between Feb and April 2025, Bitcoin has crashed by about 27.56%, almost 28% from the highs of Feb to the lows in the month of April, right? So between these 3 months, almost 30% correction is what an investor must have witnessed. Number two risk is this scams and fake coins. So there are many pump and dump schemes that exist where fake projects trap real investors. Number three is in terms of regulatory uncertainty. So laws keeps on changing and overnight regulations can affect your holdings. Last but not the least is the security risk, which means if your wallet is hacked or you lose your private keys, your funds are can be gone forever. So there is no customer care to call and who can support you in retrieving this passcode for you. So you need to be very, very careful and mindful of that. So if you still want to dip your toes into cryptocurrency, here's a safe checklist of items you should follow. Number one, you should first research coins. So stick to the top ones like Bitcoin, Ethereum, and maybe the top 10 by market cap. Avoid any random coins. Number two, always use Indian exchanges with KYC verification. So this gives you at least some legal protection, if not everything. Number three, enable a two-factor authentication as a security measure. And lastly, you should invest only what you can afford to lose. This is a very important thing. Treat it like a high-risk venture capital, not something like a fixed deposit wherein you can expect some interest every month. So to wrap things up, crypto is very risky, but knowledge and education reduces the risk, and that is the primary goal behind creating this video for you guys. If you educate yourself, take baby steps and follow safe practices, you can explore this new asset class while managing your risk. If you found this video helpful, don't forget to like, share, and subscribe to my channel. I will be creating more such educational content around finance, investing, and digital asset. Thank you for watching. This is Indranil Ghosh signing off. Thank you.